Hello and welcome to this week's bonus video from TFF Online Trading. I'm Steph Bresky and today is the 14th of December 2014. Today we're going to take a close look at the S&P 500 index, which had a very interesting week to say the least. Starting off with the daily chart, viewers of our previous videos will know that we suggested going long in this area back in October, in expectation of an upside breakout of this previous highs, which happened here. And we suggested that a likely target would have been the 23.6 Fibonacci extension of that move, which happened here. So that worked out well. Then last week we suggested that the strength of this move was such that we expected the market to carry on to the upside, and that the market in all likelihood would have reached the 38.2 Fibonacci extension. We did, however, suggest that if you were not already long from down here, going long at these levels would not have been a good idea, as the market was seriously overbought. In fact, we recommended to anyone who was long to put a trailing stop below this swing low, just in case the market went in the opposite direction. And that it did, in quite spectacular fashion, as you can see. So our readers enjoyed a good upside from here to here. But the question is, what do we do now? Well, the daily chart shows us that the only thing that halted the market from falling further on Friday was the 50 SMA over here, which has so far acted as dynamic support. But the strength of this move, and also the existence of this pin bar, followed by a strong selling, does suggest to us that we could see further downside over Christmas. Probably supported by the fact that the markets will be pretty thin due to everyone being on holiday. So let's see what the weekly chart shows us. Well, the weekly chart shows us that 2000 has now become very relevant. As you can see, it's a level which acted as resistance before, and then the market burst through it. Question is, will it now act as support? Well, we will know more as we see how price reacts to this level next week. But the one thing that does stand out to me in this chart, which don't forget is a weekly chart, is the size of this red candle from last week. As you can see, it's the largest full body candle we've had at any stage of this uptrend, even larger than this one, since way back in April of 2012. Well, to me, it means that selling was pretty strong last week, and given that we're going into thin markets during the holidays, the chances are we'll probably see this 1200 fail as support, and we'll see further downside. Not prepared to say where the markets would go. I mean, technically you would see a support around here and about 1880. Further support below here, below 1800. But I would conclude from these charts that indeed next week and over the Christmas period we are likely to see a downward correction in the S&P. So next week, if we look at the 4-hour time frame, traders might want to look at this area here for a potential pullback and maybe an opportunity to go short. So that's it for this week. Thank you for watching, and by all means come and visit us on tffonlinetrading.com market analysis. And do take a look at STTS, our subscription service for short-term trade setups, which is market signals and recommendations with built-in risk management, including trade management updates and a proven track record which you will be able to find on our website. So once again, thank you very much and happy trading.